Gold's very constructive at the moment. Gold equities is a reflection of gold price. Gold equities are the cheapest segment that I cover, just as a reflection for how much they're not looked at by the market. And gold price has been sitting around that 50 level for some time. Using real rate curves versus gold price, which is a great way to correlate where gold price should be. Right now today, using the 10-year TIPS real rates curve, gold price should be about $1,400, which is very bearish given where it's trading today. So clearly there's something where traders are saying, the TIPS curve is not right because that's a 10-year average inflation. Inflation today is a lot higher. We've seen over the last 3 or 4 months out of the US, out of Europe, out of the UK, inflation prints well above 5%, in some cases closer to 9%. So instantaneous inflation today is a lot higher than what the TIPS curve is forecasting. So real rates right now, right here, are closer to sort of -3%, -4%. On that basis, using that same correlation, gold price should be through $2,000. It should be closer to $2,500. So it's like the market's poised, looking at inflation data, watching is it transitory, which it's clearly not, and also looking as it's getting embedded. And the longer it's embedded, the more inflationary drive that we'll see embedded in the gold price. So I'm actually bullish gold. Gold needs an inflection, which is what real rates are doing, what inflation's doing. I thought that would have come in the last data prints over the last week. Maybe we've got to wait another month, but gold certainly well supported the 1850 level, and it should be higher. It should be through $2,000 based on those dynamics. And on the back of that, gold's higher. Gold equities track higher by about 2 to 3 times the gold price move. So gold price and gold equities look really interesting at the moment.
Okay, so to wrap this all up into a way that investors can play these calls that you are making, so gold equities, you're bullish, and also copper equities, you're bullish at the moment?
Copper equities have given back a lot. As I mentioned, copper price is trading at a 52-week low, and copper equities are trading at a 52-week low as well. So a lot of the negative, that lower demand side outlook will is in the price. So things like Oz Minerals, probably the best copper play in the world, listed in Australia, ticker OZL. It's trading now 30% below its year high. So that is looking really interesting. And it's trading below fair value for the first time in almost a year and a half. So yes to copper plays, specifically Oz Minerals, but also in Australia, the cheapest copper play is Sandfire, ticker SFR, looking at about 0.7 times fair value. It's well placed and got a great outlook. So I'd be looking there as well.